What's good? We got the volume on.
Let me see. Yeah, volume's on.
Let's do it. Let's do it.
Volume's here. We here. YouTube's here.
Welcome back.
What up? What up?
What's going on, family? It's been a while. A week. A whole week has passed. Hope all is well. There's a lot going on. We got a lot to talk about today. Another glorious presentation. We got some surprises. Yeah, I'm ready. I'm ready. What's up? What's up? Shout out to everybody on YouTube. Shout out to all the earners in the building.
What up? What up?
Hopefully everybody got a chance to check out the latest episode with Styles P. We're going to talk about this week's episode in a minute.
That's a big one. Hey.
Styles P and Adjua Styles.
Shout out both. Shout out to both of them.
Can't forget Adjua Styles.
Yeah. Every good man need a woman. Queen with a crown that be down for whatever.
That's a fact.
Ernest, what's up? I see y'all piling in. Shout out to everybody that was part of that glorious book club yesterday. We had a special guest come through and drop a. That wasn't even. I couldn't even say you dropped a quick 16. You did like a whole song, bro.
I popped in there, yeah, man.
Yo,
shout out to the book club.
Yeah, it was crazy yesterday, man. It was a glorious one. It was so good. I said we got to extend it. We not finished with the book yet. We're gonna have to run it up again. Yeah. It was so crazy. Shout out to everybody, all the new earners that came in, and that was your first book club. You joined at a perfect time. We really went off. Shout out to G. Shout out to Jan. Shout out to Tina. I don't say Tina's name enough. We got to start saying Tina's name. Shout out to Tina. That's a top earner right there. She gets nothing but love from me, man. So shout out to her. We're going to give her flowers. You know who popped in yesterday, too?
Who's that?
My brother Arthur came back yesterday.
Shout out to Arthur.
Yeah. King Arthur was in the building, man. It was like a whole reunion show yesterday, man. Shout out to them.
Shout out to Arthur. That's a fact.
That's a big fact.
Shout out to, I didn't even realize that we had a Jay-Z Black album, but we wearing black. So that's just a coincidence, but I like that vibe. We're going ultra black. We're going ultra black tonight. That's what's up. Is Mr. Dunlap in the building?
Yeah, he's here.
I see
he raised his hand.
Yeah. Let's get it rocking.
There you go.
Houston, Texas.
My brothers, how you doing?
What's the deal,
good,
fam?
I'm good. What's going on?
Oh, I didn't get the memo.
I was seeing if you was gonna wear black. I'm like, that would have been a crazy coincidence.
That would have been great. We got to get in sync. I was trying to get my Scorsese on all day, so
yeah,
my Spidey sense was off.
I like the camel though. I like the camel.
I appreciate that, man. How you feeling?
I'm good. How are you?
Good, man. Happy Monday. Happy Monday.
Yes. Happy, huh?
I'm just checking if our YouTube is there.
Yeah, I'm looking at it right now.
All right.
Yes, happy Monday to all. We got a jam-packed session today, like always. Just some announcements on Earn Your Leisure that we got going on this week. We got the podcast dropping tomorrow with Daryl Freeman. You may not have heard Daryl Freeman Sr. You may have never heard of him, but
OG Free.
He's a legend in the entrepreneur game out of Nashville, Tennessee. He actually started a company 20 years ago for $2,000 and then sold it for $23 million. He owns a couple Dollar General stores. He owns a ton of real estate. Big time stock investor.
Big time.
He bought Apple at what, 20? How much?
So he bought 3,000 shares, right?
Yeah.
For all of his kids. Not like he just bought 3,000 shares.
Long-term hold.
Each one of his kids got 3,000 shares.
Long-term hold.
Yeah, showed us the proof and all that.
Yeah, long-term.
We can't forget the fact that he owns a plane.
Oh yeah, he's a pilot.
Hey, yo, Ian, man. You want to hear Ella's story, bro?
Yeah.
So I'm gonna let everybody in. So like, we did the interview in Atlanta, and he lives in Nashville, and he was like, "All right, I'll just fly in and do it." I'm like, "Okay," and then texts me mid-air like he's flying the plane to come do the interview.
Yeah, that's serious.
This is a different level dude.
Got a few Ferraris, but good dude, man. Really, really solid.
Said a couple Ferraris.
Yeah, he does.
Don't let that go over yet.
Solid gentleman. So he gave a lot of game about how to sell a business. The whole process about selling a business. It's not just you just wake up one day and want to sell your business. You got to really understand what you're doing. So gave us the whole process how to sell a business, real estate plays, just a bunch of games. So that's coming out tomorrow, 5:00. And then Wednesday we got a big class for EYL University about how to analyze a real estate deal. So that's something that we really excited about with EYL University. We didn't really want to just get, just big name people and just talk about fluff stuff. We want to talk about like the intricacies of it. So like, how to analyze a real estate deal, like how to actually go through the numbers and actually crunch the numbers and look at the analytics of the actual situation to know if you're getting robbed or not. So if you're into real estate, definitely you should check that out. And then Sunday MG is back with his bi-weekly real estate calls.
Yeah.
Shout out to Matt. That's the bro. So yeah, we're excited. We're excited. A lot going on right now. We're Earn Your Leisure. Once again, thank you guys for your support. We greatly appreciate it. We have a lot planned for Market Mondays that we're working on.
Yeah.
So it's going to be an exciting end of the year, and it's going to be an exciting 2021. We're going to really, God willing, blow it out the water. So
2021 gonna be silly.
That's a fact. Ian, what would you like to tell the people?
Just that I love you guys. Thank you it's been a crazy year, but I want to thank everyone who's watching, all my family, Red Panda family, earners, trappers, like everybody who supported. Even when I know y'all thought I was just like picking prices out the sky. I'm like Boeing 93, 97, right? I appreciate you guys seeing there was like a process to it, and being supportive. And I love what you guys have built and all the support you guys have given. So it's been fun to be here every week, and also for you guys to see like my maturation in real time as well. So thank you guys so much.
And I got to give a shout out to the big bro, Kenny Burns. He's made me a weekly contributor on Free Game Mondays, which turned into like a Market Mondays on V103, the hottest station in Atlanta, the hottest station in the
only
South,
station in
the
Atlanta.
only station in Atlanta, the only station in the South Pier. And it's crazy because it was like I was talking to Alex Good Energy, shout out to my brother Alex, EYL alumni, and he was telling me, he was like, I was pulling in my garage and I was listening to you on the radio in Atlanta. So it's just the power of networking. It's the power of doing good by people, establishing good relationships. And you never know. You never know what can happen. It's like, we would have never thought that we could have Dame Dash on speed dial and I'd be weekly contributor on Kenny Burns's radio show. So, I think being a good person and just being solid is extremely underrated. So this is a stock show. So we're going to talk about stocks and investing, but I definitely just want to give that little bit of encouragement that, a lot of times we try to take the shortcut in life and screw people over. But that only ends up screwing yourself over in the long haul. So be solid, be a good person, keep your word, help other people without asking for anything in return, and the universe will reward you greatly.
So we said
Kenny does not get enough. Yeah, Kenny doesn't get enough credit too for being a great entrepreneur as well. Like being a Rockefeller, making Atlanta party scene pop. Like Kenny's a low key legend. For real.
Yeah, that's my boy. That's my boy.
Legend. And the crazy part is like he's just been super solid since day one. Our relationship could have ended very quickly the night we met him, but he's just been super solid. We'll tell you the behind the scenes on that. Shout out to Mike B.
Oh man,
he gonna kill me for that.
Oh man.
Yo, so before we start, can I do the disclaimer?
Of course.
We cool with that? All right, man. So Earn Your Leisure, Market Mondays, Ian Dunlap, Rashad Bilal, Troy Millens. This is our disclaimer for you, the public. Do your own research. Our content is intended to be used and must be used for informational purposes only. It's very important that you do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our show and wish to rely upon for the purpose of making an investment decision or otherwise. This is a message brought to you by the good folks of Earn Your Leisure. Do your homework. Do your homework. Do your homework. Hey, y'all, do your homework.
It's a very important part. Research. And then there'll be some great tips in here tonight if you guys are looking for an edge in the market. So I love you guys so much. I'm excited for the night. Nervous, but excited.
Oh, no. Popcorn ready, bro. Popcorn is ready.
Shout out to everybody on YouTube. If you can hit the like button, greatly appreciate it. 3,000. Quick run at 3,000.
It's on you, bro.
Motion picture.
If you let me share the other one, then
I got you. Let me let you log you in on the other joint too.
We're gonna try something different tonight, and I hope you guys enjoy it. And as soon as you let me know you can hear the audio, I'll mute out.
All right, hold on. I'm gonna reclaim the joint from you real quick, and then I'm gonna tag you.
And I promise I won't end Zoom.
Nah, you good, man. We're gonna do a little magic trick tonight. We always try to up the bar here. Sometimes it works, sometimes it doesn't. You never know what could happen.
All right, bro. It's on you. You can do it. You could actually make it yourself now. Both of y'all are in there. You see it?
Yes. Now, all I need to do is be able to share, and then I'm good. Thank you guys on YouTube and in Zoom for being patient. I hope it is worth it.
You good on that one?
Yes.
All right.
Happy belated birthday to Hove too.
Oh yeah. That's not by mistake. That's not coincidence. Hove is there because December 4th passed and we didn't have Market Monday. So
the Billy Goat.
We're gonna keep talking about him till he's sitting next to us, y'all.
Has to happen.
And y'all gonna make it happen. I'm sure y'all will. 2021. Big goal.
Ready?
Let's do it.
Popcorn.
Let me know if you can hear audio, and then I'll mute out. If nothing else,
yeah, we good.
The lesson that we can gain from this year definitely is nothing matters more than our health, time with our family, and peace of mind. But let's be honest. During the last recession, I felt lost. So I'm here tonight to empathize with those of you who felt like you missed out. And I felt like many of you felt at the end of the last recession. But I want you to know I used that as my fuel. And I promised myself that I would never get caught in another recession again and not know what to do. Because the truth is, if you look at the laws and the rules that Templeton and some of the greatest investors have followed, at the time when things are most pessimistic, those present some of our greatest opportunities. So week after week, we've done our best to give you the best information possible to get you some of the best gains. But this is my vision for all of us and my vision for you. I want us to have our freedom. And I want us to collectively as a community really master this. So if you want to master this with us, I want you to put yes in chat. Because life is short and it seems like the year only gets crazier, I want us to have more peace, more love, more kindness, and more empathy amongst each other. So I think we need to introduce some new rules of what a retirement will look like for us. So for me, I've been working on this book for a couple of weeks, and the 3 cornerstones that I'm really emphasizing for all of us is 1, only working on what we love, with who we love, and for a few hours a day. 2, 4 hours of work, 4 hours of family, 4 hours of fun, and 12 hours of peace. I'm going to be very honest. We worked too hard and sacrificed too much of our time and our lives to be tied to someone's schedule forever, to then retire at 65 and then say we're going to enjoy life then, or even wait till the kids go off to college and then enjoy life then, and then be too old to actually enjoy it. So I want to set the framework for why this is so important, because the truth is about retirement that most people don't tell you is that you can also be lonely inside of that retirement if your friends and family and those that you love are not able to do it with you. So let's pull up a retirement calculator, and I want to show you a couple things that we can do if we stay focused. So let's say you're 38 years old, and let's say you make $122,000. Let's do $125,000 a year, right? And let's say your expenses are $35,000. Got a net worth of 20 grand. Let's say you do 80% stocks, 20% bonds. And let's say we'll lower this rate and let's start small. And let's calculate. If we get an average return of 8.6%, this is the age in which you could retire. Now I want to show you something very fascinating, because most people spend almost all the money that they bring in, no matter how much they gross, right? So let's say if you make 125 a year and you spend 115,000, and expenses. Look how long it's going to take you to retire. It's going to take you 37 years to retire. So one of the things I love to emphasize is number of shares is very important, but your rate of savings and rate of investing is much more important than picking the perfect stock. And I think we've done a great job of giving you guys that, right? But I want to emphasize this, and let's do another example. Let's say you're 42, and let's say you make $105,000 a year. And let's say your annual expenses are, let's say 33,000. 80% stocks, 20% bonds, and let's say we knock up this return and what you can get, and let's say you're averaging 14% return. By sticking to your plan, you can get there in 6 years. So, but collectively as a community, it's really important that we all do this, because what fun is it going to be if you can retire, but all the people that you love are still at work and you don't have time to spend with them? Okay, so this is where we have some fun, and I want to ask you some questions. So let's do an accountability check-in for the year, because I want 2021 to be greater for you than 2020 was, if it wasn't amazing for you. So my first question is, did you buy shares every month? Write yes in chat if you did, or no if you didn't. Number 2, what do you wish that you bought in March and April? It's one of the greatest dips in the history of the American stock market. And I know some of you may have FOMO about it, but I'll give you a blueprint at the end what to do to never have FOMO again and be equipped with all the knowledge that you need. Number 3, did you execute when the market was at a low? Number 4, did you apply what you learned this year? I want us to stop the intellectual fapping. It's exciting to learn, but it's more important to do, right? Are you better off this year than you were last year? Number 6 is very key. This is the end-all be-all measuring stick of investing. If your strategy worked or not, what did you make? Let's not talk about theoretical gains or what could happen in the future. Let's talk about what actually was made. If you're happy with what you made, stick to the plan. If you're not satisfied or not pleased and it doesn't put you closer to your goal, let's make some adjustments. Number 7, would you make the same decisions next year as you did this year financially and what you invested in? If not, we have to make some changes. If you could have made the same results from long-term investing versus trading, would you still have traded? Because I think there's this misnomer that long-term investing is boring and you can only get 7 to 12%. Of course, there are no guarantees. Investing has considerable risks. But during these collapses, if you go look through history, so a quick homework assignment, I need you to go look during every recession over a 2-year period, what was the average return when the market went back up on the upside for individual stocks? I think you'll be elated at what some of the possibilities are. And this is the most important question. If you didn't take any action, why were you afraid? Because if we can get down to the root of it, of why you were actually afraid to take action, it would make it easier for us to help you individually and as a community. A lot of times we don't take the next step that we need to because we are afraid we are going to fail. I know, I've been there, I understand. But like I said, we come here every week to try and give you the best information that you need in order to be okay. So whether you're going for safety and indexing, or whether you want aggressive growth, technology stocks, which we've been advocating for years, that's been my formula, we're here to help you. And who says you can't get big gains from long-term investing? Let's look at what Tesla's done since April. This is all long-term investing, no trades. And I am pro trading. I love trading. But once we take our emotion out of what we love versus what is most practical and what has worked historically, long-term investing first, and then adding a cash flow bump with short-term investing is the real blueprint. Look at Amazon since April. Look at Apple. Look at Moderna. Right? So kudos to everybody in the stock club. I appreciate you guys. But this goes to show, with proper planning and holding, look at these kind of these are the kind of returns that most people hope for over a lifetime. And then if quantitative easing remains in place, and then we finally get the vaccine or whatever catalyst that is going to help the virus go away in 4 or 5 years, 3 or 4 years, these companies can grow even further. And throughout this year, we've given you the complete arsenal for what you needed. So if it's your first time, you're in for a treat, I appreciate you. But let's walk through the arsenal of some of the things that we've told you to use to make you a better investor. So, number one, to load the boat, the best and ideal price if you want to look for a place to get a bunch of shares would be the 200-day moving average. It's a classic strategy, but most don't use it. People are always looking for an edge, something new, opposed to looking at what works. Use what works. Your savings rate plus the amount that you invest plus the number of shares will determine when you will be free. So put in chat, how many shares do you need to be free? We keep talking about generational wealth, but are we taking generational action collectively? That's what I want for us. So this year has been stressful as hell, but I want to make sure that we're doing our job to make it as peaceful as possible and easy as possible to understand this, so we can all do well together as a family. Number two, the 100-day moving average is a secondary entry point. So let's say it doesn't go to the 200 and we miss the move on the 200. We can then go to the 100. Number three, we told you the inverted yield curve predicts the recessions 100% of the time. So once the yield curve starts to invert, we have anywhere from 12 to 48 months to actually be in a recession. And at that point, when the yield curve inverts, you need to start looking at the companies that you like and highlight the areas where you want to buy if the market drops. Number four, 2 indexes and 2 tech. Number 5, fear and greed calculation of where to buy good companies. Only with good companies. They have to be quality. They can't be low grade, cheap companies. Number 6, we told you crashes only last less than 180 days. So if we know that the market with quantitative easing normally lasts 180 days, and since 1945, the average length of a recession is really only 11 months, we have to endure 11 months, between 180 days to 11 months of pain to enjoy a lifetime of freedom. I had a conversation with an investor who invested heavily in 2007 and heavily in 2008, and then also in 2020. I asked him if he would come on the show. He said no, he likes his privacy. I said I understand. But the gem that he did want me to share with everyone here listening tonight is that if we follow through and pass this information on to our kids and start them early, he said because of those 2 pullbacks that he's witnessed and been a part of, he's been able to secure himself, his son, his grandchildren, and the generation after. And the crazy part is, he never made more than $150,000 a year in corporate. Not 1 year. It's about personal sacrifice. We've given you the fundamentals that matter. So the founder, the character of the founder and the founding team. What's the vision for the company? Their unbreakable competitive advantage. If a company does not have an unbreakable competitive advantage, they will have a hard time being a leader. They may be a secondary or third best player in the space, but they won't be a preeminent player there. Pricing model is key. They need a loyal or a ravenous customer base, and then they need a catalyst for multi-decade growth. If a company can't be dominant for 20 or 30 years, you shouldn't consider it having it in your portfolio. We've also talked about how to exit and plan your exits with fib retracements. And then for generational wealth, you got to look to hold for 30 years. The blueprint is here. And the thing that I want us to focus on is eliminating the noise. There's so much misinformation and so much news that comes out every day. It almost makes you change your plan. But the best thing that you can do for yourself, your family, and then us as a community, is have a plan that you do not waver from. A lot of you have been asking, is the fall of passive investing coming? I know there's some people who are beating up on it. $7 billion in outflow happened to the S&P 500 Vanguard. And even in Asia, passive investing has risen from 47.6% from 15.8% in about a decade. But look, mutual funds started in 1924. Index funds, rest in peace, John Bogle, started December 31st of 1975. Somewhere, and then FANG came, and that was the hottest thing ever, right? But at some point, there will always be a basket of companies for you to invest in. And whether you were paying attention to it or not, this entire time we've been showing you how to make your own, even with the assessment of 2 tech, 2 index. You don't need 42 companies inside your own personal portfolio. If you have 2 technology companies that you really believe in, and then 2 indexes, you have exposure to all the other companies that you think that you're missing out on. Less is more, right? Type in chat, less is more. Because a lot of times that information happens and we take things out. And I've talked to several, even some people in Stock Club, like closed out of Tesla early in April or May because of fear. And then FOMO kicks in, it's like, should I jump in now? Let's wait. We want to take calculated measurements for when we want to buy these companies. Our job is to have the best companies in the world work for us. If you're not a better executive than Bezos or Elon, there's no reason we shouldn't have our capital working in that business to benefit us. So here's your 2021 plan. I want you to review what you invested in. I want you to write what went well. You have some big gainers. If it's a quality company, keep it, right? Third, I need you to write down what you wish you did differently. We all make mistakes, and mistakes are okay. This is how we learn. This is how we learn. We all make mistakes. Number 4, I need you to silence the outside noise. A lot of the times the people that are asking you to change your plan and say, have you considered this? And should you potentially, and I'm not telling you what to do because I'm not your advisor, but a lot of the times that isn't for your benefit. I showed you earlier an example. You guys heard us scream all year. Franklin Dynatech, QQQ, Tesla, AMD, Amazon, Nvidia, Microsoft, Apple, and other outlets and news platforms will say, well, what about this? You have to think every time that you change and take a company out of your portfolio, please write this down. This is really important. How many years of freedom are you sacrificing by taking that company out? This is a zero-sum game. You're either going to get more time or less time. There's no in between. I know with indexes, we have safety. But regardless of what happens, whether passive investing, and I know it became really hot. Of course, Money Master the Game and other outlets were a catalyst for that. Wealthfront, of course, was one of them as well. Betterment was another. But even if it goes away, you are equipped with everything that you need to know. Tie some of your money to the market itself, and then tie some to technology. And then if another industry becomes the preeminent leader, go there. If this is 1980, we would be doing oil and airlines. This is in 1970 and 1980. However, and lastly, the futures market. Now, for everyone in the free program, I know you guys don't want me to talk about the futures market. I'm not going to give away our system. I know, because you guys are going to kill me, right? I love you all dearly. To my Red Panda family, I love you from the bottom of my heart. Dream Team Apex, Final Tribe, love you guys. Alpha, love you guys. Just want to give a quick breakdown of what the futures market is. The simplest answer, and then for those of you who are on the institutional side, I know this isn't the best answer, right? But for simplicity, the futures market is you are just taking an estimate of what the future price of an asset will be. It's trading like anything else. Whenever you trade a stock, you're like, hey, I'm trading Tesla today because I think Tesla's going to go up. Great. Or if you're shorting something, Nikola, Hertz, right? You're shorting it because you think that it's going to fall. The difference is in the money that is potentially there. And I don't want to induce anyone. So of course, trading has considerable risks, right? Consult with your advisor, and most people should not trade. But let me pull up a calculator for you and just show you really quick. So like if you have, let's say you trade any penny stock or any stock, and let's say you do 33 shares. It's not a lot. And then let's say you get 21 pennies of growth. It's not much. It's not much, right? But the difference is, like, if you trade treasury market, and let's say you do like 33 shares, which are called contracts, and you get the equivalent of 21 pennies, which would be 21 ticks, you'll be looking at $21,625.25. Or if you did 33 shares of the S&P 500, and let's say you got 21 pennies equivalent, 21 ticks, to the upside, you'll make $8,662.50. But the biggest mistake in trading that I see is, for all my traders, write this down, not knowing the number of selected trades you're going to take for the year before you even begin investing. It's a huge mistake. And number two, not having a statistical edge based on data, not emotion. Don't say, well, I know I could win. Okay, if you take 100 trades, how many have you won thus far? That's your edge. And then number three, I'm going to tell you, if you long-term invest, the reason why I never worry about other asset classes is because if I'm investing long-term, I know if I get a select number of trades here, any other percentage that I need will be baked into the futures market. So for most people, like 20 trades is ideal for most. Type yes in chat if you think you could potentially win 20 trades. So like, I have to say this, but this market and every market, but particularly the futures market, punishes the impatient and rewards the disciplined investor. And this is why I stress to everyone, and especially in the sniper program, the free program, don't overtrade under any circumstances. You will always have another move. So let's walk you through an example. So if you did 33 contracts, you had 20 trades on a year, with the example that I gave you in the treasury market, if you hit all of them, let's say on a $25,000 account, let's say it may take you a year to do it, but would it not be worth a year to invest and wait for the right moves collectively? You'll be at, 1,700% and some change return in a year. And then after that, I want you to take half of that money and invest it for the long term so you can get to your golden retirement faster. It's about peace of mind. It's about peace of mind. So, question of the week: what has been the opportunity cost for someone investing in bonds for these last few months versus stocks and other assets? Okay, great. And this is the reason why the classic allocation of 80-20 works so well. I know the bond market took off because the Fed was buying everything to prop the market up. But now that the market is stabilizing a little bit, we see that the bond market is sliding down. Short-term investing lesson of the week that I need you to take home. And I just touched on it, but please write this down. Map out the number of trades that you're going to take for the year and do not deviate from it. Overtrading is the cancer that kills most accounts. Most people can win 10 to 15 trades. The issue is most people don't stop at 10, 15, or 20. They end up taking 140. And brokers know that if you continue to trade, you're eventually going to blow up your account. And their job is just to make sure that you get good data. It is up to you to be responsible with how you invest. Chart of the week, S&P 500 90-year chart. There's so many people who are always talking about the market is going to crash. The data states that if we have a crash, it's going to be less than 11 months. And over time, everyone's worried about the crash, but everyone isn't worried about the rocket to the upside. 90-year historical chart. And betting against the market and waiting for a big crash is saying that the entire economy is going to erode and fall. So if you think that's going to happen, you have a case to short the market for a long period of time. But otherwise, you should be to the upside. My question of the week for you, as we begin to close out, are you here to become wealthy and become truly free as a community, or are you here to be entertained? If you are here to be wealthy and free so we can have our time, peace, happiness, let's stick to the plan. If you're here to be entertained, this may not be the best avenue for you, even though we tried to make it entertaining, right? But if you're here to be free, I need you to be dedicated to the plan, because not only are you taking care of yourself and your household, but you're inspiring the other ones around you to say, okay, I'm going to do it as well. We have to stop talking to people about investing and show them, hey, this is what I have done. And this is what worked. And that's why I show, okay, great. You can get great returns in long-term investing, right? What I wish I knew from the very beginning was, despite the intellectual complexities, this is one of the easiest paths to wealth. Tons of data, tons of things you can read, but you have to choose to go through them. It's one of the easiest asset classes to be a part of. If you ever own a business, you know owning a business is not easy nor predictable. And as we wrap up, I want to give you your homework for the week, which will help you. So I want you to write the 10 companies that performed the best over the last 10 years. I want you to write out what are the returns for VGT over the last 10 years. Ticker VGT. What is the returns of IEF over the last 10 years? What is the 10-year return of Microsoft? Number 6, I want you to make a list of 20 stocks to put on your list. I want you to make the 10-year return and write out what the 10-year return is for all of them. And then I want you to pick 5 that you want to hold for the next 10 years. Investing is not as hard as everyone makes it. For me, when I got caught in the last recession and I did not know what to do, that was my driving force. I'll give you guys a quick blueprint how to get good in any industry. It's a very short form if you don't have access to mentors. Read the top 50 books in any industry and you'll have all the knowledge that you need. It's not that hard. I'm going to be very honest. If a lot of you read Money Master the Game cover to cover and execute it, because this is what I want us to stop doing. I want us to stop saying that I don't like this. The only thing should be, okay, did this work when I executed it? That has to be our baseline. But if you read the top 50 books in any industry, you'll have all the answers that you need. I want to tell you guys from the bottom of my heart that I love you. I hope this has helped you. You have the arsenal. You have everything you need. We're here for you every single week to give you the best information in the market. I love you. My only ask of you is that you go execute, go love each other. Do what is right amongst each other. Let's change the world and let's start to enjoy life more, because if anything else, 2020 has told us life is short. There are no guarantees. For those of us that are in our 30s or 40s, we can't wait till we're 50 to hang out with our friends and family. We need bonding and community time now. We need peace now. We need happiness now. We need love now, not later. That's it. I love you guys.
Yeah, boy.
To freedom.
Yeah, boy.
Are you not entertained? Is that not why you are here?
Oh, man.
Spaniard.
Oh, man. That boy Ian Dunlap, man. The music, it kind of made me feel like I was getting a massage. and the tone of his voice made it seem like I was in therapy. It was very relaxing. Wow. It was a very therapeutic. I needed that.
Yo, he got
I needed that.
He should probably do the intro to our album.
that's free therapy right there.
You know what I'm saying? Like I felt like that was like worth a ticket of admission type thing right there.
Yeah.
Dunlap again.
Wow.
Is he there?
Did he
Take
leave?
it back from me before I end the Zoom.
Oh, okay. I thought he just left.
I thought he was shaking hands in the lobby.
Yo, I'm good. Kissing
the babies and signing autographs.
Kissing babies.
No,
Yeah, that's a fact. Drop the mic. Sexy chocolate. That's that coming to America. Sexy chocolate.
The thing is, we've endured so much stress, and we talk about mental health, but we don't do enough things to engage in it. So a lot of times, like you guys know, like I'm working on a show up until the last minute. So I thought it was only right I'll give a more fire presentation, but also bring energy that was peaceful to the space as well. So I can't be like, hey, meditating. I'm on here frantic, like, yo, 233. Then if it dropped to 228, 54, you can see the stochastics. It's like, okay, great. Let me even my energy out. And then I thought visually, since you guys have been rocking, that it was only right to the audience. And I've been telling you guys from the beginning, like, you guys are getting a $25,000 masterclass for free. So when you guys like, well, you don't teach us how, I'm like, 100 MA, 200 MA. Also went over price channel. Homework, real homework. And kudos to you that have done it. Go watch the episodes from the very beginning and look at what we called and where it's at now. But there are some key lessons in there that I think will make you a better investor. So I wanted to make sure my energy was right and also bring some fire to the table.
I think that was dope, man. That was actually one of the questions we posed yesterday. Shout out to everybody that was part of the book club yesterday. It was, yo, why are you investing? Like, seriously, why are you investing? And some people were like, yo, I'm doing it for freedom, or I'm doing it to get wealthy. And the simple answer is like, you're doing it to make money, right? Because and that will provide some of those things, right? You will accumulate wealth when you have the money. You will accumulate some of those freedoms that you have. So we got to make sure that we're doing it to gain income so that we can contain all those other things, man. And make sure that we're not trying to lose money. Because some people are investing in just losing money because they have no plan. And that's where we went back to that, man. So I'm like, yo, damn, man, this is like spot on. Shout out to you, bro.
Yeah.
Thank you. I appreciate that.
If all else fails, you can always do voiceovers.
Yo, yeah. We got an audio. Yo, we never put out that audio book. Now that I think of it, we should have Ian narrate the audio book.
Yeah, I'm just trying to use all my talents. I know some of you just like, you think I'm all jackets and stocks. I got a couple of talents in my bag. So
very talented man. You could do audio books, you can do voiceovers, starring Liam Neeson.
Gosh,
that's funny.
They still waiting for the EYL After Dark, man. They waiting for you.
Earn your leisure.
Somebody put that in chat. Like, oh, it's a good idea. Investing after dark. That's a good idea.
Investing after dark has considerable risk.
Very true. I don't want no trouble.
No, I got to draw. Yeah, tell me, I got to draw up a new disclaimer. I got to draw up a new disclaimer for that. We'll talk about that after.
Got that. No OnlyFans vibes. We good. We're investing in the market. You won't see me with an OnlyFans page.
Oh man.
No worries. So, but no, I appreciate y'all and kudos to everybody. And even those that, the people who come on and not like the videos, like I appreciate you guys as well.
Shout out to y'all too, man.
Yeah, I want us to stop arguing. And then also when you aren't clear on your mission and your vision, that's when the argument comes about. Well, I think this is better. And it's like, you're trying to be seen instead of just having a freedom. Like, let's just get to what we need to do. And truth be told, like if you think or know that your strategy is right, you don't have to market the truth. You don't have to sell the truth. It'll show. It'll definitely show. So I hope you guys enjoyed it. For those of you I put to sleep, my bad.
No, that was fire, bro.
No, that was dope. That was dope, man. We appreciate that, man. That was a great job. Great job. Thank you. Before we get into the EYL University calls, we want to talk about some trending topics.
Yeah, man. So obviously, I mean, the big news this week is that, we have those 2 IPOs that are coming out. We finally got the dates and we got the target prices. So AIRBNB is going to be coming out, going public on Thursday with the target range between $50 and $60. And so there's some news around now. We're going to have a discussion about that. And Door Dash, which I know a lot of people are looking at, their target range is 90 to 95, and they'll be going public on Wednesday. So that is huge. And I know there's a lot of people, especially earners, man, because we get the messages like, yo, what do you think? Should I do it? Should I do it? And so, yeah, let's go into that.
Yeah, shout out to my man, Kat. He hit me the other day and he was like, yo, I want to buy Airbnb. The day it comes out. Like, what do you think? So, obviously there's a lot of speculation. A lot of people are excited about Airbnb and DoorDash, but Airbnb, in my personal opinion, I think that Airbnb is one of these revolutionary companies like Uber. Like it's very rare that you have an opportunity to just completely change an industry that's been around for hundreds of years. And the hotel industry, hospitality industry has been around for centuries. And if you really think about it, in a few years, Airbnb has really changed the whole dynamic of it. So I say that to say I'm long Airbnb. I definitely think that I'm going to buy some shares of Airbnb, but I will not be buying shares the day it comes out. What I've learned from IPOs is that you kind of got to let it settle out. It's a lot of speculation when it first starts, and then a lot of people sell on the first couple days, and then it drops. We saw this happen with a variety of IPOs. So me personally, I think that I believe in Airbnb. I think it's going to be here for a long time, and I think that is only going to get bigger. And I think, of course, it's going to have problems. And anybody has problems. And they still haven't beat all their lawsuits. They still have, complaints with neighbors. And there's a variety of different issues that Airbnb has. But one of the things that's really encouraging about Airbnb is that it's extremely resilient. Like we talked about Bitcoin last week, how Bitcoin was resilient.
That's where I'm going.
Airbnb is extremely resilient. It could have went under during COVID. A lot of people wrote Airbnb off. They thought it was over. A lot of hosts wasn't getting paid, and the host was suing Airbnb. And they've had struggles with Miami and a lot of different cities
trying to shut them down. Boston,
and they tarried through. They tarried through the turbulence. Like my vocabulary words.
So I was like, wait, did he say tarry? Carry?
Tarry with a T. They tarried through the turbulence, and they've come out victorious. I feel like Mike Tyson. So, I am long Airbnb. I believe in Airbnb.
Yeah.
But me personally, I just think you just got to give it some time.
Yeah. So here's the thing about Airbnb. Here's the thing about both of them. So if we're going to look at both, we got to look at the times that they're coming out. Right. And so like they're both going to debut this week. But let's think about the pandemic in itself. And like what you said is very important. Like Airbnb went through a lot. It could have crumbled. Right. But let's look at the numbers. It's IPOing during the pandemic. Right. So obviously, a lot of people, they lost some money, obviously, because people weren't traveling. So right now, here's the numbers on Airbnb. They have over 150 million users. They're averaging 14,000 new hosts per month. That's 2020. 14,000 new hosts per month. The average nightly rental is $187. They're in over 100,000 cities, and they have over 7 million spaces. That's 2020, right? And they're IPOing at between $50 and $60, right? DoorDash. Same thing. Now, the pandemic has hurt Airbnb. On the opposite end, it has helped a company like DoorDash, right? When you figure that everybody's home, everybody's ordering, here's their numbers. They have over 390,000 merchants. It's a lot. They have 18 million customers, and they're about to hit 1 billion orders. Now, that's 2020 pandemic. 2021, 2022, can they sustain that? Especially when you have competition in that area, right? You still have Uber Eats, right?
With low margin.
With low margin. So like they have competitors, whereas in Airbnb, who's their closest competitor in that field? You see what I'm saying? So like when you say
VRBO,
right? Yeah. When you're talking about I'm long on it, I'm with you on that. Pause. I'm with you on that because it's like, yo, I see like, yo, if they can thrive and they can survive in this, when this world opens back up like it's supposed to, they're gonna make a killing. Dunlap, what's your thoughts?
What's your thoughts on those companies?
I'm going to flip it on the audience. Tell me what the debt to equity ratio is, and then tell me which company you think would be better. I don't like any business that has steep competition and low margins. That's a recipe for disaster. The debt of Airbnb concerns me, but anyone that's looking to invest, like, here's my thing. This is my final answer about IPOs. Wait at least 60 days. But if you believe in the company, like when I was in college, I told a story that I couldn't get, family and friends to invest in Facebook at a time when I probably could have got in on an early angel round. But I took the blame and said I wasn't convincing enough behind it because I knew how big the company was going to be. But most IPOs are going to dip. But if you believe in a company, hold it for 10 years. Don't let anyone sway you from your conviction, even me. But I want you to consider the opportunity cost. So while you're hoping for this thing to go up, is there another company that you can tie yourself to that would be better, that would get you better returns. But I think Airbnb will be okay. They'll struggle for a little bit because that debt, I think they owe another $1 billion. But if they can get over that hurdle, they do have a competitive advantage. And if we continue to shift in terms of landscape and how things are done differently this era, they could have a competitive advantage. To me, I just don't like to guess. I like my companies to be stars out of the gate. So I'll wait and see about 90 days, and then I'll make an assessment and then catch it on the upside if I think it's good. So.
Yeah, somebody said, what about Roblox? Not this week. We'll get there. I know Roblox is coming.
Xander's on that wave now because of Ryan. Good Lord. Please
Yeah,
don't mention that company again. He's been Roblox crazy last 3 days.
Wish is coming. We know that. We know a firm is coming. And then there's some speculation of what's coming in 2021. I saw Stripe. Yeah,
Stripe is serious.
Stripe is serious. Y'all not up on Stripe.
Yeah. That Stripe is serious.
That's Stripe. Yeah, there's some speculation. And there's another one, SpaceX. There's some speculation that will be IPOing in 2021. And if you didn't see the news, that I mean, literally I just came across my page before we came on. They got the deal for the Starlink, when they put the satellites into space, and that's how you're going to get communication. So they got approved from the SEC, like I think a $900 million deal. So like this guy, Ilion, man.
Yeah, he's
a different dude.
Yeah, that work, going back to what we talked about, like all the greats, Mayweather, Brady, Jordan, Jay-Z, supreme work ethic. Like Elon's still putting in 15, 16 hours. Like, yes, supreme work ethic, but Stripe and Roblox, like Stripe is I think it could be the new PayPal and Square.
I know I call him Ilion. I know it. His name is Elon. I call him Ilion. It's okay.
They buddies. That's his nickname for him.
That's my guy.
Ilion. That threw me for a loop. I wasn't gonna say nothing. He's like Ilion.
Nah. I've been calling him that.
The meditation music both got y'all woozy.
That was the kid from Miami. Remember?
Yeah. That's why I be talking.
The kid from Cuba.
When he was like 10 years old.
Shout out to him. Yeah, Ilion Gonzalez.
He's like, adult now. He's like 30 now.
Yeah, free. There was like a whole big thing in Miami.
Yeah, Elon's different though, man. SpaceX, Tesla, obviously we already know, but that SpaceX.
And please stop shorting Tesla.
That snowflake is heavy in the streets right now.
I ain't touching it. Not yet.
Snowflake.
Not yet.
Snowflake is heavy in the streets.
Small said, yeah, I'm in there.
Snowflake is heavy in the streets.
I got some other things I'm interested in.
That's a fact.
You want to talk to the people?
Yes. All right. Let's take some calls from EYL University. First, guidelines. So EYL University, you guys have the privilege to ask questions. We ask that you keep to one question. Please do not ask individual stock questions. Ask investment questions, and please don't ask for a scholarship.
First and foremost.
And if you have any issues about tech or anything, please email the proper channels.
Who we got? Michael Lloyd. I haven't seen his name before. Michael Lloyd, unmute yourself. You've been unmuted. What's going on?
Hey, what's up, y'all? First and foremost, thank you for everything y'all do. Thank you, Ian, for that sniper program.
Thank you, brother.
I'm very grateful for that. And thank you for EYL for setting it all up. My question is, so are you guys going to also be giving out new companies at the beginning of the year? Like how you gave Diamond and all the ones Ian said in that video throughout the year? Are you going to be doing the same thing for next year?
Yeah, we don't really have like we give every week we talk about a different company because the market changes. That's how I look at it. The market changes so much. So we probably have mentioned over 70 companies in the last 40 some odd weeks that we've been doing Market Mondays. But for me, I don't really want to just give 20 companies up front because in March it might change, right? Yeah. So from week to week, new situation. The world changes very quickly. Perfect example. When we mentioned Mondera, am I pronouncing that correct?
Moderna.
When we mentioned Moderna on the podcast, that was in March, right? There's no way that we could have mentioned that in January because we didn't know the coronavirus was going to hit. The reason why we mentioned it on the podcast in March is that I was doing some research and I'm like, okay, what pharmaceutical drugs are in the lead for this thing? I had never heard of the company before. I just researched it. At that time, it was already up 50%. That's another thing too. Sometimes people think if it's already up, it's too late. It was up 50%. We mentioned it. We said, this is a company that's working on a drug for Corona. You can research it. It's documented. We said it. And we say, you know, of course, do your research, but just if you're looking to make money during this crisis, might be a company that you want to invest in.
Yeah.
Since that, it went up like 179% or something like that. Since we mentioned it.
Yeah, same in the same conversation. Like from that standpoint, I was working in school. I'm like, yo, they about to shut down the country. Yo, people gonna have to work from home. You should probably look at Zoom. You should probably look into Zoom. Like we literally said this in March before anything was shut down. Like if we're headed that route, yo, Zoom is going to be something. And what is 387% this year to date?
Yeah.
Crazy.
387.
Yeah. So if you guys just listen and then do your research, execute, buy a couple and hold them, you'll be good. I mean, because of course, so what I want you guys to do, I want you to go Google John Templeton's story about what he did in during the crash for his era. Okay. That was one of my great inspirations. We may not get prices that low ever again, but like we may have maybe 2 more big recessions in my lifetime that we can capitalize on. But when we hit extreme bottoms like that, and with this caveat, as long as the Fed comes in with quantitative easing, it's going to be a good time to buy. If the Fed ever says that we're not going to put any money into the market to prop it up, don't touch it. That means they're going to let the world go to hell in a handbasket. But what we give companies, yes, we've done it every week. The thing, my question would be, will everyone else execute?
Yeah. And even when we talked about another example of that is Boeing. So, you know, Boeing wasn't on Boeing is a company that I personally invested in myself. I wasn't thinking about investing.
I told you not to get out of it. We good. You make other stuff. You good.
Yeah. Boeing, you know, I wasn't thinking about investing in Boeing in January or February, but when I saw it, but I know in my heart that Boeing is a $400 company. So when it reached below $100 for the first time in like 5 years, you know, that's something that you don't plan for that to happen. Like, you know what I'm saying? We didn't know a global pandemic was going to happen and that airlines is going to shut down 94% of their flights and all of these airlines is just going to just tank. Who would have expected that? Like, you know what I'm saying? We couldn't have told you to buy Boeing in January, but if you did buy Boeing, you're up over 100%.
Nope.
But here's the point I will make, and everyone write this down. If we have a crash tomorrow, the top 20 on your list, map out where you should get in. Because I don't want people to be like, well, I didn't know the crash was coming. It's like, for me personally, I knew if the Dow ever went 50% down in value from the 5-year month and it stayed below, we were in trouble. With that same correlation, I went through 300 companies and marked off where I wanted to get in. So I know y'all think I would be pulling numbers out of the air, but it's a lot of research that goes into that. So the homework I would give you is mark off the 20 that you like a lot. And if the world falls apart again, where would you get in? Because if you do the research while everything is calm, it's a lot smoother. It's really hard to plan what you would do and the fire is already in your house. But if you do the drills beforehand, it's a lot easier. So same thing here. Just map out those prices beforehand. So once again, back to the accountability. I can give you every tool known to man, but will you do the work? And I know a lot of you have, but just be prepared just in case, and it'll make your job a lot easier.
And I guess, Michael, I'll end it with like saying that, yes, we are creating our list. We got our list we've created for 2021. But
we never stop.
We never stop. We always create.
Even like personally, like, you know, we always look at new stocks every single day. It's like, what's going on? Like, not to say that every stock is good, but it's a sport. That's what I want to say too. This is, I'm glad you brought that point.
Appreciate you, bro.
Investing is a sport. Like, you know, if you play ball, you can't just say, I'm gonna go to training camp and then that's it. Like, you know what I mean? Like, it's a day to day. Every single day you got to practice. Like, you can't just take 5 weeks off because you prepared during the summer. That would be the equivalent of like if LeBron trained during the summer and then that was it. Yeah. Like, you still got to train. You got to practice every single day. So the world changes so much. You got to stay up to date every single day. You got to research.
And that's part of the cost of freedom. I know some of you guys don't want to hear that. Like, even me, I went to sleep at 4:30 preparing for the show. Got up right back at 7:30. Got on a Dream Team call. Finished editing here. As soon as we get off here, stock club call, research right after.
Yeah. That's what it is. Yo, I did it for the first time yesterday. I literally gave everybody that was with us yesterday afternoon, right? Because, you know, I appreciate anybody that spends a Sunday afternoon with us at 3. I gave them every publication that I read. Every publication. I said, yo, here it is. Here's the list.
And then another thing.
Take it and read it.
Another thing that we talked about before, but just to kind of like give you like some perspective of, you don't necessarily, the whole point of this show is so you don't need us. Mm-hmm. A good teacher does not want to keep his students dependent on him.
If it was up to me, we would have wrapped up in August.
Yeah. So it's like we talked about the ETF play, right? So like you take a strong ETF, like everybody knows SMH is one of my favorite ETFs, right? I'm heavily invested in SMH. So like if you look at SMH, right, and you break that down, you see that Taiwan Semiconductor is in there, NVIDIA is in there, AMD is in there, QQuam is in there, Texas Instruments is in there, right? So now that gives you 7-8 stocks to research, right? You know the ETF has done well for an extremely long period of time. You probably heard of some of those companies, right? So do you necessarily need somebody to give you those companies to research?
Google,
Probably
yeah.
not. Probably
Google
not.
how much is VGT up for this year? I want you guys to Google that. So anyone that we name, like you just have to write them down, and most of the homework has been done at that point.
Big fact.
And even with the stock club thing. So for those of you who launched the Too Expensive campaign, if you go back and actually watch the episode, I literally listed every stock, multiple weeks, just to see if you will buy. Didn't buy. That same list to Amazon, Shopify, and I don't want to, but even if you compare the tech list that was in Stock Club, it's arguably one of the best lists in the country. Like it, and if you look at it and compare the numbers, in some cases, it's better than some of the arrangements of things that like Kathy and Bill put together. But like I said, we like in a video, we put together the formulation. Even if index funds go away, passive investing falls apart, robo investing falls apart, anything else that you miss tied to a market. So even if you want to invest in the Nikkei 225 because you think Japan is going to be the next leader in the next 15 years, Nikkei 225 pair with tech or whatever other industry you want to be a part of that's leading the market, and let the money roll. A lot of the conversation is going to cost you. That's why I asked you, like, even in doing all this research, I don't want us to be so intellectually smart and then we're actually piss poor in terms of how much they were making. You look at Tesla, everybody believes in Tesla, and I'm like, did you get the shares? You would have been up 400 or 500%.
I want to say something real quick, if I can. Somebody said most ETFs are at 52-week highs. Most investments are at 52-week highs because the market is at a 52-week high, at an all-time high.
You can't be afraid to invest when the market is at a low and then be afraid also when the market is at a high.
Yeah, so you could wait.
Can't time it, man.
But you could wait if you want to wait. But just keep in mind that if you're looking, if an investment is down right now, of course, there's always going to be an exception to the rule. It's probably not a good investment. If we in a situation where everything is rallying strong since springtime, everything that's like good solid company has rallied very strong. There might have been pullbacks here and there, but everything is pretty much inflated at this point in time. So it might not be a good time to invest right now. This is critical. This is why you have to think critically, right? We're not telling you to invest. You got to take it into consideration. If you want to do dollar cost averaging, that's a way to put money into the market every single month. So you're buying high, you're buying low, and then over the course of time, you'll average it out. We talked about that numerous times. But if you just want to put a lump sum into the market, over the course of time, it'll still probably go up no matter what. But if you want to wait for a pullback, then you can wait for a pullback to happen. But don't be discouraged because something's at an all-time high. Yeah, it's still a good
market. Always goes on sale.
Yeah.
The market always goes on sale.
That's a fact. And that's why I said you got to do when you do the research, man, and you could attest to this because I've hit you up plenty of times and Shadi and Trap, they all could tell. When you do the homework, man, it takes you down such a rabbit hole that you start finding other things. Yes. You know what I'm saying? It's the reason why, like when I saw a TMO, I'm like, yo, wait, they got the vaccine, but they got, oh, wait, let me look at this. When I hit E and he was like, yo, where you find this? Right. The same reason when we saw XLY and it was like, wait, there's an iBuy?
iBuy. I mean, we gave out some.
It's pro shares too. Then you start finding so many other things. When you dive into the homework, you go down the rabbit hole of just information and it just opens up to you. And what's most important is like, yeah, we could say it, but when you do the homework, you'll understand why we said it. And once you get the why, it's over.
And timing is important. That's why Ian has the stock club. And that's why, because it's like, I mean, if you want to just put $100,000 in Apple and wait, you're going to make money. That's going to happen. But yeah, if you want to be a little bit more strategic, but that's why also we talk about technical analysis, 100-day moving averages, 200-day moving averages, things of that nature, knowing when to look at the inverted yield curve.
You guys slept on that price channel too. I'm gonna be real.
All of these things that are here for you. Just got to take advantage of it.
That's all. That's all. Let's go. Terry Ross. I'm sorry, I almost said Terrence Ross. That's a basketball player. Terry Ross, what's going on? Unmute yourself. You've been unmuted.
Good evening.
What's up?
Hey, thank you guys for all that you do.
Thank you, brother. How are you?
Doing well, thanks. I have had several jobs where I've left 403Bs and 401Ks, and I've heard this question before about you can roll them over into an IRA, but I always missed the part. I thought I heard something about you can do a self-directed without the taxes.
Yeah, self-directed IRA. Thank you. Good question. So an IRA, an individual retirement account, is very popular. When you leave a job, people roll over their old retirement accounts to IRAs to have greater control, to have more investments, to a variety of different reasons why you would roll over to an IRA. But you have what's called a traditional IRA, which mostly allows you to invest in like stocks, mutual funds, ETFs, index funds, stuff like that. And then you have a self-directed IRA, which allows you to invest in a variety of different things. You can invest in cryptocurrency, you can invest in gold, precious metals. And one of the things, probably the most popular thing that people use self-directed IRAs for is to invest in real estate. And any IRA, you don't pay taxes on until you take the money out and put it in your bank account. So it's, as long as it's in the IRA is just a vehicle. We talked about that in the book club yesterday. A lot of times people confuse IRA as like an actual investment, but you can have an IRA annuity. You can have an IRA stocks. You can have IRA in a savings account, and you can have IRA in a home by way of an IRA. So a self-directed IRA. So yeah, that's how it works. You roll it over in a quick view of it is that you roll it over into the self-directed IRA for the custodial account, and a custodian has it, and then you purchase a house. As long as you keep the money inside of the self-directed IRA, you don't pay taxes on it. And then when you sell a house, you can put the money back into the self-directed IRA, like in a money market, and then you can buy a new home. So there's restrictions and there's different things. We actually have a class on EYL University about self-directed IRAs. So you're a member, you might want to check that out. It's it gives like a 40-minute explanation, because there are like different things that you need to be aware of. There's like prohibited people that you're not allowed to buy a house from, or you're not allowed to sell a house to. If you're sitting in a self-directed IRA, you have to be careful about rent, like what you do with the rent, things of that nature. So yeah, I encourage you to watch that class. But self-directed IRA in a nutshell is a way to buy real estate tax-free using your retirement account.
Hey, Terry, I'm going to encourage you to do one other thing. On December 19th, my brother's going to be giving a financial planning class. So make sure that you attend that. Those are always incredible. I sit there and I write notes myself. So like I called him yesterday. I felt proud that I had knew what annuities were, and because I had been listening to him so much. And he was like, yeah, you got it. I was like, all right, yeah. All right.
Well, thank you. And thank you for that real estate advice, and listening to you guys. I've been putting a nice stack into a 403B, and I said, well, let me see what my 403B is doing with the money, because they guarantee you 4% back, and found out they're putting it in Vanguard and getting about 8% average back.
You're a teacher?
Yes.
Shout out to our educators. Where you teach at?
Memphis.
Oh, shout out to Memphis. Shout out to Tennessee. Memphis. We got a lot of love in Tennessee.
Shout out to Memphis.
We'll be in Cashville when this thing open up. Come check us. Slim and Huskies, what up? Those are our bros. Appreciate you, bro.
Appreciate it. And there's also a Roth self-directed IRA as well. I want to throw that out there.
Yeah, let's go to Lynette. Lynette O'Neill, unmute yourself. You've been unmuted. Oh, Lynette.
She's there.
Oh, hi guys. I'm sorry.
Hey, how are you?
You good, Lynette.
Hi. Did I raise my hand?
Oh, it was an accident?
You did.
You all so good. So good. We won't hold
That's a nice fur you have on, though.
Huh?
I said that's a nice fur you have on. You stylish.
Oh, thank you.
Do you have a question you want to squeeze in?
No, I don't.
Lynette, it's all love.
I want to say I appreciate all of you guys for everything that you do.
Appreciate you.
Thank you. I appreciate you as well.
Thank you.
Everyone listening, pick one indicator to master. Pick the vehicles that you're going to be in and stick to your plan. Don't, whether you dollar cost average or you wait for a place to load the boat, just stick to your plan. You're good.
Renee, what's going on? Unmute yourself. You've been unmuted. Oh, you didn't even wait. You just went on. I forgot, Renee. I forgot the rules. I forgot the rules. I don't got to unmute you. You know how this goes. What's up?
So my question is actually for Ian tonight. Ian, I so appreciate everything that you've done. This sniper program is killer.
Thank you.
I am learning how to manage my emotions, and that's a part of my question today. So I'm filling up my stock journal, kind of just trying to track everything that I'm doing day by day, learning Ninja Trader and just studying every day. I'm finding that I'm having a little bit of trouble getting my money off the table in the right amount of time. And I'll give you a real life example. This one hurt so bad.
NASDAQ.
NASDAQ, listen, I'm loving it. It is making me feel like I'm on a roller coaster, and I love every minute of it. I actually, so here's the example. Last week, I got in at the right spot. I want to say that it was Monday it was Monday, because we don't trade on Tuesday. So it was Monday. And I got in right on, it was on the
Nope,
average.
don't say it.
Oh, I'm sorry. Okay.
Don't say
I got it at the right spot. Okay.
Okay.
And I just waited and I let it go and I let it go. But then it took a turn and I was like, okay, I'm going to be patient because, you know, it's about being patient. However, it kept on going down. And I started to kind of panic, and I'm going, well, now what do I do? When is the right time? And I kind of learned a little bit today. I picked up again today, lost a little bit, but I did my last, 3 trades, not 2, but 3. But I won the last 3 and I made my money back. I know it's like not what you're supposed to do at all. I got emotional, but I kind of want to figure out the right way to do this so I'm not getting emotional. Like you said, we know when we're taking the money off the table. But this NASDAQ it's a curve.
Yeah. So the thing, you're basically asking how to handle emotions in a trade.
Yeah.
I think so. Yeah. So I could take the money off the table at the right time.
It's a day by day fight. So the thing, so I'll ask you this: if your life was on the line and I was a doctor, and you have to have a heart operation, but I only had 4 surgeries under my belt, or 14, and I rushed and did 3 yesterday, would you let me do your heart operation?
That's a no.
Wouldn't do it.
No.
So the thing is, with everyone that's trading, so that's why even with the music and all that, that helps. So I know a lot of people feel like the more trades you take, the better that you're going to get. What's going to end up happening is that you're going to form bad habits, and they're very hard to break. So stick with the number of trades, as much as you may hate to hear me say it, because if you can control the number of trades that you take, you can control how often you will lose and how often you won't. And also that risk to reward is going to help you a hell of a lot. But anybody that's over trading, that's deviating from the plan, don't. Like my guy Pierre brought it up today, like you have to marry your plan. Anytime I hear anybody deviate, even for those of you like, hey, I started trading 20 minutes early. You were 20 minutes wrong. It's going to cost you. So like, breathe. I know it's exciting. I know it's a roller coaster, but I don't want us to be on this emotional roller coaster. I want us to be able to go into the market like snipers, mark our spot, collectively get in, get our profit, get out, so we don't end up in danger. So I would take 1 a day. And then also, if you need to, take some time off, meditate, and come back and be a lot more peaceful. Because if we're worked up, it does not work well for us in the market. So
appreciate you, Renee. Appreciate you always.
Let me ask YouTube a question. Because I was telling, like, there's a lot of people out there that do stocks. Obviously, a lot of people talk about options. Options have become very popular these days, and you can make a lot of money in options. But nobody really talks about futures. And if you understand futures, you can make just as much or maybe even more than you can on options. And I've been encouraging Ian to really talk more about futures on Market Mondays. It's complicated, but maybe like if we just break it down step by step over.
I think it's less complicated than options. I just don't want to induce people to go trading first, because I know in 20 years, and this is me loving trading, the majority of the audience is going to make more. I haven't met one person like, and I would have loved to ask the guy that you interviewed, would he have rather traded Apple for 4 or 5 years or continue to hold him from when he got it? Like, you guys saw what he had.
Yeah.
You know, so but if you can put them together, it's amazing. But I think we can. So yeah, my plan was just to make sure everyone was long-term investors first, like we talked about on episode 70 in the end.
All right. But so I say that to say, if you're interested in learning a little bit about futures, type in yes in the chat. If you're not interested, then
I'm about to put my vote in there.
We won't. We'll never have this conversation again.
Yeah, and then we'll bring it up. And this isn't to elicit you to buy anything or join anything, because most people don't have the discipline to do this shit. So I'm gonna let that go.
Your dad just finds you. Your pops just finds you, Ian.
I'll send it.
Let me go to.
But if you can lock in on your discipline, man.
Really quick, I'm just going to do our earnings because there's 2 earnings that are on my list. So we got Wednesday we got Adobe, a company obviously that we spoke about, and we have Thursday we have Costco, and tomorrow we got a big day for anybody that is invested in Salesforce CRM. They have their you don't say. They have their investor day tomorrow, and on Wednesday, Starbucks also has their investor day on Wednesday. So I will be tuned in to Salesforce Investor Day. I'll be watching that, and hopefully some of our earners will be there too, because Salesforce is indeed that. It is a force.
What is Investor Day?
They're going to talk about what they're going to be looking into next year. I'm sure they'll be talking about the acquisition of Slack. I'm sure there's going to be a bunch of questions about that and what their plans are to do with Slack.
You want to talk about that? Slack acquisition?
You want to talk about it? Yeah. So, I mean, I said it yesterday, man. Slack was a company that I kind of invested in.
What's Slack? What is Slack?
It's a part of a work economy, a communications type system. I guess it would be the equivalent for business. Yeah, it would be like
Teams.
What Teams, Microsoft's Teams. Yeah. And so it was kind of like a rival. And so I spoke about this, man, not investing with hope. And in June, I invested with hope because I was like, yo, this is going to be a rival for Microsoft. People are going to be home. I'm like, all right, this is going to be it. And obviously I know now, leave hope at the door and don't ever invest with hope. And so I left the investment, and 6 months later, here comes a cloud service that is saying, look, we want to rival what Microsoft is doing. Mm-hmm. And they bought Slack for $27 billion. And so people have been watching that like, wait, how come Salesforce is tumbling, and why is right? That's the part of the homework, though. You know what I'm saying? We could give it to you, but that I would encourage you to do the research on it. So I'm sure a lot of questions about that will come up in Investor Day, and so I'll be tuned in. If anybody needs the link, we'll put the link in the Facebook group and all that.
What is a 10-year return of Salesforce? I want you guys to Google that and put it in chat.
Ian, where would you rank the CEO? Where would you rank him?
If you guys know my face, you know my face.
Yeah, he's kind of big. I mean, they're very opinionated about him.
Yeah.
So. Yeah.
Salesforce?
Yeah. Another one. So like, I know Trap is big on that, figuring out who the CEO is and understanding how they make investments. And
Mark's very good.
Yeah. Look at their last acquisitions. And I know a lot of people are like, yo, $27 billion is a lot of money. And of course it is. But if you look at the acquisitions, some of the biggest tech acquisitions over the past decade, I mean, it kind of falls right in line, right? Yeah. If you look, I mean, it's a major player for sure. But if you even look at like what Facebook did with Instagram, like they paid $1 billion. That was probably the steal of the century.
Absolutely.
Even when Google acquired YouTube, I mean, these things all fall in line with what Salesforce has just done.
I mean, and is it expensive if you can get a multiple of 5 or 13x over a 7 or 8 year period? I mean, there's some assets in there that could make them a dominant player.
Of course.
No pun intended. Yeah. So I think everyone reacts to the news and is like, okay, great. They acquire Slack. I want them to go up 22% in a week. It may take a while. And it may take a year once they roll out the plan, but once they get the integration down. Yeah,
I think the complete integration, I think they're anticipated for 2022. If I'm not mistaken, I think 2022. So it has some time, obviously, and that's why watching Investor Day and seeing what's coming is very important. If Salesforce is something that you want to invest in, all right, make sure you do that. All right, let's go to Latoya. Latoya Page, unmute yourself. You've been unmuted. What's going on?
Hey, peace.
What's going on?
How are you?
Thank you for having me. I literally went up like 130% on one of my stocks. And I've been just started investing.
Ooh, talk that talk. Can we get some fire emojis for her, please?
That's amazing.
We ain't letting that go over our head.
So So that's just encouragement for anyone that's just watching. Just do it. I literally took a little by little. But my biggest question, I just started options like last week, well 2 weeks ago. So sorry if it sounds like a stupid question. But if you expire out of the money when you buy a call, do you still have to pay that premium?
If you expire out of the money.
Like,
let them answer. Go ahead.
Yes, I'm sorry.
No, you're good.
So pretty much one of the options I bought, I succeeded in, and then the next week, last week was horrible. 2 call options, they expired out of the money.
You mind saying exactly what you did? Like what's it could be a teachable moment if you don't.
Yeah, of course.
All right.
Well, do you want me to say the stock or?
Yeah. You can say the stock.
And this was short term, right?
Yeah, it sounds like short term.
In both instances, there was short term. With Square, I succeeded 2 weeks ago. I made like $500. And I had it for a week. But last week I invested, I believe, in Neo. But I expired out of the money. But I still have the cash in Robinhood just in case. I didn't know if they were going to take that premium out, or are they going to penalize me for the premium because it's my first time.
What was the strike price?
Oh man, I'm sorry, I don't have it in front of me, but
Neo dropped. So
it dropped. It was like, I'm sorry.
It was up in the 50s and so
I'm trying to see what strike price she got it at.
Oh, okay.
Because she said it's over.
Yeah, I mean you lost the money.
Yeah, it's over. Oh my gosh, I'm sorry. I'm a little flustered because I'm a little nervous.
It's okay.
It's all right. It's all right.
I want to say from a trading perspective, if you guys are going to trade anything short term, any asset, any real estate, futures, anything, you have to have an irresistible edge over all your competition.
Yeah.
If you do not have an edge, don't do anything. And that's a part of the reason why I don't come on here and talk about futures, even on swing trading, because you usually have like a 21 to 25 day, 30-day cycle. Is not enough for most people. Intraday trading or short-term investing, you have to be really good, really patient. Things work out better the longer that you end up holding them. So please keep that.
I lost on one option so far in life. It was a DraftKings option. It was a short-term play. I think I put $2,500 in, and when the time came, it was far short of that, and
dwindled.
I think it's just like I think it went down to like $50, something like that. And it was like a couple hundred. I tried to sell it.
It was like $50. It was like $50.
Yeah, no, you're done. No, it's done. That's why I was just trying to figure out exactly what you were referring to. But if the strike didn't strike, you're done.
So I don't have to pay that premium or anything. I'm not penalized or anything, right?
No, I mean you don't have any money.
The money's gone.
Good. Okay. You answered the question.
Yeah, because they don't even. If it was if it was a stock, it'd be different. I would ask like, yo, did you use your margin to invest? And then that would be different.
No, sir.
Yeah, well, I don't think you're even allowed to. It's just, on TD Ameritrade, you can't you can't trade with your margin account for your options. So that money's gone. But it's a learning lesson. You know what I'm saying? And I see a lot of people saying like never invest short term, and Neo is one of those. I mean, you know what I mean? But no, you got it. It's a lesson. It's a lesson. You know what I'm saying?
Absolutely. All the lessons are blessings, and much blessings to you, Kings. Thank you for everything you guys.
Latoya, that wasn't bad. Why are you saying he was nervous? That was great. Thank you for sharing, because you just helped somebody.
Thank you.
No, I appreciate you.
You just saved somebody.
And for those of you that do short-term invest, especially if you're doing any assets that move faster like futures, it will make you a better long-term investor, because then you have more practice in getting in and timing the market a little bit better. So use those experiences and translate them to long-term investing. I promise you. Like, I know you guys feel like the money isn't in long-term investing, but the longer you hold any investment, whether it's a business, real estate, invest anything, like, it's going to pay off the longer you have it in your possession.
Mike, you crazy. Mike is crazy. Latoya, if you still listen, man, if you're looking in the chat, there's a bunch of people, especially on YouTube, like, yo, that just saved me. Like, you never know, man, what can inspire somebody to change their mindset. Like I said, like we make no secret of the mistakes we make because we live by that guy's code in the back of us, right? We did that, so hopefully you don't have to go through that. So thank you for sharing.
That boy Kevin Samuels.
Nah, let's not go there. Let's not go there. Let's not do that.
That boy Kevin Samuels.
Everybody type in chat long term first. But I'm glad. Thank you for sharing, and then also getting that lesson, because one of the things that ends up, pushing us over the edge is like those losses. And what I don't want to happen is your spirit for investing to get broken, and you correlate those short term losses, and it's going to be the same on the long term side. But for any of you that plan on trading, like, you have to get good. It is a profession.
Yeah.
You need a considerable edge.
Yeah. I mean, you battling sharks on a daily basis.
You're going against the best people in the world.
And you're a goldfish.
Yeah.
You are literally a goldfish out there. You Nemo out here.
Yeah.
You know what I'm saying? And you battling sharks. It's like what's your advantage over them? What you got?
I have one. Stay away. Yep.
Somebody put Nemo in the chat. I really love the earners. Yo, I love y'all. Can we get the fish emoji, please? Yo, Stanley, what's going on, bro? Unmute yourself. You've been unmuted. They put the fish emojis up.
What's going on? Can y'all hear me?
Yeah, we hear you perfectly.
Yeah, How are you?
Hey, man. Salute to y'all. I've been trying to get on for a minute, but salute. So I have a 401k rollover question. Basically, I got laid off during the pandemic, so I rolled over my 401k to my RA. So I really want to know, what should that structure look like? ETFs, mutual funds, stocks. I know it depends on me, but any advice on, any percentages of, what?
Where is it invested now?
So I took it out of it was invested with my job. Now it's in a rollover IRA.
But like, do you know, like, what it's in an IRA? But like, do you know what you're invested in? It's like in a money market, like in a money market account. Yeah. How old are you? How old are you?
I'm 33.
Okay. Are you experienced with investing, or are you just learning about investing?
Man, I started investing like last year. Like, my account right now, I'm doing pretty well in my individual account. I have some good ones in there. I watch the show. I take notes. I do a little research. So,
All right. The reason why I asked you was, to see how aggressive you wanted to be with it, as far as like managing it yourself. So I'm gonna give you a couple different answers. If you just want the autopilot, then just pick an ETF, pick an index fund, pick both. Pick an index fund and an ETF, and just ride it out with that. Ian's philosophy: 2 tech companies, 2 index funds.
How's returns doing it?
That's not a bad strategy either. Some people, especially like with your retirement account, you probably don't want to be like, too hands-on making trades, stuff like that. You can if you want, but I wouldn't recommend any more than 25% of that. So just for like a round even number, if you have $100,000, you put it in an IRA, you might want to put, let's say, 25% in an ETF, 25% in an index fund, 25% in another index fund, and then now 25% you can actually manage yourself and, like, do individual stocks, buy Tesla, buy Apple, things of that nature. So the easiest route to go is just index ETF, because it's a long-term play. You're not really going to touch it for a long time, God willing. You just wanted to let it rock. And your other what we call non-qualified money, the money that's not in your retirement account, you can be like more hands-on and more aggressive with, take more risk with, and do different things of that nature. That would be my suggestion. But I guess it really just comes down to your risk tolerance. But those are a few different paths that you can take. But you need to get it invested, though. You don't want it. You can't just let it sit in the money market forever. You definitely want to put it in the stock market at some point.
Yeah, you're gonna have negative returns on that. VGT is a great one, though. A good ETF. Tech base gives you some edge. Good returns.
Okay. And one more question. The market is at an all-time high right now, and I'm knowing that. So my thing was, I was like kind of waiting for a drawback to actually invest that money. You think that's cool, or just put it to work?
I mean, yeah, it's a lump sum. It's a lump sum. So over the course of time, it's a retirement account. So, it'll still go up over the course of 10, 15 years. But I mean, yeah, we all expect at some point there's going to be a pullback, right? At some point, we're just not sure. and we're just not. So the scary thing about waiting for a pullback is that sometimes it never comes, as far as like what you're waiting for. I remember I was talking to a client years ago in like 2016, and he was telling me like, I don't want to put a lump sum of the money into the market right now because it's going to pull back heavy, like a heavy pullback. The type of pullback that happened in March, he was waiting for 4 years for that heavy, steep pullback. We didn't really have that deep pullback until March of 2020. So it's very difficult. But what you can also do, we never spoke about this before, but this is another strategy for lump sum. You can dollar cost average on a lump sum amount. What I mean by that, let's say you have $100,000, right? It doesn't have to be all or nothing. You don't have to put $100,000 in at one time. You could put $10,000 in every single month for 10 months. So now you dollar cost average on a larger amount. That's a strategy also. It's the same principle of dollar cost averaging every single month out of your paycheck with your 401k, but now you dollar cost averaging out of a larger amount. That's something that sophisticated investors do as well. And we never really spoke about that option, but that's something that you can do as well. If you feel a little uncomfortable, but you feel like you want to get in, but you feel like it's going to pull back, put $10,000 in. Like I'm just saying, just if you have 100,000, put $10,000 in every single month for 10 months.
Perfect. Hey man, appreciate y'all. Shout out to y'all. Y'all moving the culture forward. Like, man, about 400
I appreciate
years.
you, family.
Feel me? Thank y'all so much.
Appreciate you, Stanley.
And I ain't even charge a consultation fee.
What's the yeah? You couldn't even book me right now. You couldn't even book me right now. Hey yo, earners, man. I know guidelines. I know, but Stanley said he's been trying to reach us so long, so we let him rock with two. Y'all forgive us.
GT. BTI.
I see those Salesforce numbers came back in, Ian. They found the number.
Yeah,
they found
pretty solid company.
Yeah,
I mean, and that's what we talked about earlier. Like a good company is going to be good for, even if you feel like you missed out. A good company should be good for at least half a decade. I don't want a company that's good for a year and then they fall apart. So,
all right,
let's get one more question.
Let's go to Raheem. Raheem Jenkins, what's going on? Unmute yourself. You've been unmuted.
Oh, snap.
What's going on, man?
Yeah. What's good?
Man, I was just, I'm ecstatic right now. Hey, how y'all doing? Thanks for having me on, man. Appreciate it.
Are you from Brooklyn?
Nah, you guess again.
Are you from the Bronx?
Not from New York.
Damn.
Are you from Jersey?
Nah, you from Camden.
Are you from Jersey?
From Jersey and Philly.
Okay.
That's Camden. That's close.
Tri-state area.
I'm from up. Yeah, definitely tri-state. Definitely tri-state.
What part of Jersey?
You catch me up Union near Elizabeth, Irvington area.
Okay, Irvington. All right.
Yeah,
Shout out to Irvington. Shout out to East Orange, South Orange.
I spent a lot of summers in Vineland,
You got a very
New Jersey.
hip hop name, Raheem Jenkins. I knew you had some East Coast flavor to it.
Definitely.
Definitely.
Yeah, most definitely.
Shout out to
man.
Jersey. Shout out to Jersey.
Now I'm in Philly right now, so it's a little real dangerous out here. But
yo, shout out to
I'm just happy I'm on here with you. Give me what you got, man. I'm just ecstatic right now. Y'all understand? I just finished talking to y'all with my girlfriend. Like, damn, these guys really talk some talk right now, man. But
shout out to you.
Yeah, let me stop talking. I just had a quick question for Ian. I think I just put in a question and answer, or for both or anybody. I know we was talking about the standard deviation. I can't remember exactly who or when you were talking about it, but I'm trying to figure out because I'm just learning how to do options, and I picked up the book that I'm bad with names. Boza had on options, volatility, and damn nerves. I try
Breathe.
to get
It's okay. I got you. Breathe.
Yeah. I've been reading that book pretty much, and it talks about the standard deviation and trying to find the option pretty much, or to know when to get in the option when we're talking about the price modeling and all that stuff. My biggest concern is how do you find it? I'm getting lost into finding standard deviation of any stock so I can actually get in into, I guess, to match up the theoretical pricing, if that makes sense.
Gotcha. Yeah, email me your question and I'll text it to Bonowin, and then whenever the brother gets time, when because he got his daily duties, I'll try and find an answer back to you because I'm not an options expert.
Okay.
But I'll try and do my best to get that answer for you.
Oh man, I'm about to shed a tear, man.
Don't do
No,
that.
I'm here to help.
Nah, cause now y'all understand, man. Cause like we don't have. And I literally talked to my brother. My brother was just here like an hour ago. Like we literally don't have like nobody we could look up to, and like you guys really been like really inspiring. I'm about to cry and everything. Like y'all guys really been inspiring because I've been through a lot of stuff these past 3 months, and just locking into you guys on when I can. And just coming from like an accident stuff, I was like, I'll be messaging Ian and all the time, like just, and y'all just heard some cool dudes, like, and we don't know you, like we don't know you guys, like, and stuff like that. But man, I just appreciate you guys because, like I said, we don't get to look up to nobody in the hood, except what we used to, and I'm just trying to, I don't know, just trying to set the pathway for like my friends that can't even get in and out the streets. So yeah. I'm just like,
hey, yo, Raheem,
man.
Here's what I want you to do. I want you to email me at Troy@EarnYourLeisure.
You got it. Right.
Email me at Troy@EarnYourLeisure, and we're gonna get on a Zoom call this week, and I'm gonna walk you through this options thing. All right, I'm gonna show you some things.
Are you in a sniper program?
How that sound?
I appreciate that. It's my birthday Thursday too, man.
Yo, let's do it. Let's do it. Let's do it. Like we'll lock in a time this week, and like I'll walk you through and show you how to move around in this game a little bit.
Yeah, and send Troy send me his email. I'm gonna put him in a sniper program too.
Oh,
let's do that.
Yeah, I appreciate you, man. If we
Raheem, make sure you send that to me, bro.
Guys, yo.
How old are you turning, bro?
27, man.
27.
You got Cash App?
Yeah.
I send you a Cash App, family. I love you.
Thank you, guys, man.
Thank
Yo,
you, brother.
love is love, bro. I see the love heart. The hearts is going up.
That's real.
Big love for you, bro. Big love.
Nah, it's reality.
Yeah.
It's reality, and it's one of these things. Shout out to Maurice Claret, man. He he's a friend of mine, and he texted me the other day. He was like, "Yo, my cousins, like they real heavy in the streets, and I never thought that they would care about anything." And they text me like, "Yo, you heard about Earn Your Leisure?" He's like, "How you know about Earn Your Leisure?" Like, so I say that to say like what he's saying is real. What he's saying is real as far as the role models is like, we always have sports entertainment, and then it's always negative after that, and it's like to now have entrepreneurs and investors, and like he said, it's just we just regular people. We just listen to hip hop. We grew up just like how everybody else grew up, and it's inspiring. So we don't take that lightly
at all.
We don't take that responsibility lightly, and we are extremely humble.
Hey, King, please drop your Cash App so I can have the people bless you, and I'm gonna bless you too. Sorry, I'm gonna cut you off, but let us help you.
Yo, man, I can't think y'all got enough, man. Yo, it's crazy, man. I really want to say thank you, guys, man.
Thank you.
Yeah, put the Cash App in there so like the earners can see it, and then we can put it in YouTube and all that, bro. Or put it in YouTube if you watch it on YouTube.
Because especially coming from where I come from, I mean, every inner city the same, but even like seeing all the stuff with the rappers and like Mo3, Vaughn, stuff with Quando, Duck. Man, I think if this stuff would have got implemented like 25 years ago,
we would saved a lot.
Incarceration rate would probably be in half. Murders would probably be in half. Like especially when I grew up in East Chicago, Gary, South side of Chicago, like everybody who grew up in the Midwest, and the futures market is in Chicago. That's the part that makes it so heartbreaking, knowing how many people got killed or were murdered over little or nothing, just trying to survive. So, man, I feel you.
Shout out to my boy Ken. He just sent some money. We're gonna send it over to the good brother once we get his Cash App.
Yeah.
And that's one of the things too. It's like, even the entrepreneurs online, they highlight the success, and it's like, it's not me, it's just we're not here to make you feel worse about yourself. Like, I'm saying? We're here to encourage people, and any level of success that we've been blessed to receive is only by the grace of God. So we can never act we can never act in a boastful or arrogant manner, because you're only one step away from being a millionaire or sleeping on the street,
homeless. For real,
it's a very thin line.
Yeah,
it's a very thin line. So you can never forget that, and you can never forget about the communities and the people that helped you get to where you are, because we don't make it until everybody makes it. You know what I'm saying?
Yeah.
1 billionaire is not enough. 1 millionaire is not enough. everybody has to be financially free and educated.
Yeah, and that's why I keep saying we got to do this as a community. And I know sometimes you guys think I'm coming off hard, but I'm pushing you to do this because I care, man. It's been one of the roughest years for all of us emotionally. And King, I appreciate you even opening up and like being that vulnerable to do that. Because honestly, thousands of other people feel the same way that you do. So it takes a real big person to be vulnerable like that. So thank you.
I just put his Cash App in the joint. Just show the brother some love, man.
Yeah, happy 27th, boy. And definitely hit me with that email. Hopefully I get
Panda snipers. I mean, cut you off. Send him something. Send him something. You know, I bless y'all. Just send him anything you can. It don't have to be nothing, you know, out of the range, but bless him. Pay it for it.
Yeah, Raheem, we gonna lock in this week, bro. Just send me that email. We're gonna lock in, and I'm gonna walk you through a little tutorial from you know what I've learned.
We couldn't have picked a better way to wrap up the show. It always ends like this, man. We had the brother one time that was incarcerated. We had there's always emotional stories, and this is real. Like this isn't just this ain't no just corny game show.
That's
like
the first time you ever called in.
Financial literacy is life or death, man. Like people like I said that when I say financial literacy is life or death, I'm not being over dramatic. It's literally a matter of life and death. Sometimes people making life altering, life changing decisions over $5,000, $10,000, where they could have made that, you know what I'm saying, in the stock market. They could have made that in real estate. They could have made that selling merch. They could have made that in a variety of different things, in trucking, whatever. And that's another thing too. It's not just one path. We're here to show you as many different paths as possible. Because you know, when your money's not right, you make decisions that you probably wouldn't have made when you have money. That's just the reality of it. And like X said, when you hungry, you eat whatever's there.
What kids say? First things first. When the dude ain't money ain't right, it makes things worse.
It makes you into a different person.
Yeah.
Yep. And like y'all said, well, we're all one decision away, or, you know, thank God for my family looking out, and then friends like, you know, brother believing, mom believing, you know, like just keeping you going. You know, you guys, like, we all could be in an unfortunate position. So, you know, that's why I thank you guys every week. You know, for those of you tune in, I appreciate you. Like I always say, like 4 years ago, I couldn't get 4 people to listen to me about investing.
Oh, wow. Hey, yo, Raheem, I hope you're still listening. Matt just hit me just now. He said that, yo, he's so moved by what you just said that he gonna give you the home buyer's blueprint. He letting you in the course for free. So shout out to our boy MG, our brother.
Shout out to Matt.
So now you're gonna have a real estate game. You're gonna have an options game, and any other game that you want, man, is at your doorstep.
I'm putting the sniper program, man. I got you.
The sniper program, yo, bro. This is gonna be a hell of a 27th birthday, man. So that's love, bro.
Yeah,
Matt, we appreciate that, bro. MG,
yeah, MG,
super MG,
super MG for sure. Okay, closing words, Troy.
Yo, I want to give a shout out. Let's give a shout out to Jarrell Hardy, because I know Jarrell I seen him on YouTube. I seen him in here, and he put a post on Facebook in the private investment group about how he went to the auction and met another earner at the auction, and they bought properties. And it was so empowering. It inspired us. Like, yo, wow.
Well, that's the power.
Amazing.
That's the power of networking and community.
Yep.
Shout out to EYL University. Shout out to everybody in the Facebook group. And he put that in there that he met them on the Facebook group. They went to it. They bid on the auction. I guess it was virtual, but COVID, and they got a property. You never know.
It was crazy. Shout out to you, man. That was inspiring. But it was the execution that was more touching. It was like, yo, they heard something, they executed on it, and now they're doing it together. They didn't go together. They just happened to be in the same room because at the same time they had thought like, I need to execute on this now. And so shout out to Jarrell Hardy.
Yeah. I'll let you have the last word before I'll just say the last thing I'll say is shout out to everybody. Appreciate your support. And shout out to the United Kingdom. Shout out to London. And shout out to Toronto. I saw somebody in YouTube, like, I wish they had something like this in London. The crazy thing is like, we're the biggest in London. And we're the biggest in Toronto. That's crazy because we're in America. So we definitely want to bring some London investors on. I think that would be good. Some people from Canada. You got to expand this thing worldwide. And hopefully when this thing opens up, we're definitely going to take this show on the road. And London, Toronto, Canada, Ghana. Definitely going international, man. This is going to be big, the big biggest.
The big show.
The big show.
The big show.
The big
A lot
show.
of people to help.
No, you made it to the big show.
The big show. The big show. That's a fact. So shout out to everybody international all over the world, Europe, Africa, Asia, but definitely Toronto and London, because those are our two biggest international markets.
Yeah, shout out to Brazil. Somebody in Brazil? Shout out to Brazil.
Well,
Rio. Shout out to Swan.
Go check out that Bovespa index. It's in Brazil.
Ian, what would you like to leave the people with?
Thank you for letting me get my Hype Williams Scorsese action on earlier. I hope you guys enjoyed it. If you want me to do more of that, please let me know. Thank you guys for being loving. The thing I want to drive home seriously, I want us to take community action so we can be free. And then I know it's been a rough year, but I want us to be kinder to each other, love each other, because we never know what people are going through. Like, people are dying. I want to send some love to my guy Twan. Like, he messages like us, like he went to 2 funerals in the last 4 days. Life is short. Like, all the bickering that happens in life and online is like, at the end of the day, it doesn't matter. So be kind, be loving. And for everyone who watched, thank you.
Yeah.
To you guys, thank you so much. Rashad, let me get them glasses up off you.
I got some.
When's it again?
It's any day now.
Yeah,
I appreciate it.
Hey, yo, yeah, and we always say this to each other, but definitely please reach out to somebody. Like I said, every week, one conversation can change somebody's life. We had an untimely loss in our community today. So
who passed away?
the Foster family, they lost their cousin.
Today?
No, last week.
Okay,
last week.
Yeah.
So rest in peace and prayers to the Foster family. Chuck, you are bro. So we praying for you, Shaniqua. We praying for you, Sonny. We praying for y'all. Just definitely reach out and text somebody that you haven't in a while, or you thought you might have had a problem with and it wasn't that serious. You never know what one conversation can do. So please do that. I encourage you, I implore you to do that. Please.
Absolutely.
Yo, we love y'all.
And all of my Detroit players.
What up, though?
When I get the shades, y'all going Detroit's gonna appreciate this one. if you know, you know.
The big show over and out.
Everybody in the Midwest.
Ian Scorsese.
Meditation music had y'all slurring the words after. Elions.
Hey yo, YouTube. Shout out to Elion and Elon. Hey yo, YouTube earners. The next post Ian puts up, make sure y'all tag him.
And
Ian Scorsese.
This will be on all podcast outlets at 12 o'clock tonight Eastern Standard Time. Tap in.
Love you.